Road to Recovery segment presented by International Well Building Institute. As real estate investor and entrepreneur Grant Cardone. And Grant, I love having you on the show, so thanks again for joining us. I want to start with the fact that, last year you came on, this was before the pandemic hit, you said homeownership in America was dead. Of course, COVID hit, the Fed pulled to 180, started cutting rates to zero, and now median existing home prices are 35% above their prior peak back before the subprime mortgage crisis hit. So what are you watching for right now, and how real are the bubble risks today?
So Zach, home ownership is still dead in this country because the only people that are buying homes right now are people that have equity, great credit, and a job. Everybody else is left out of this cycle. So the people that are moving money, right now we have massive migration going on from big cities for multiple reasons: politics, money, COVID, concern about their safety. You have tremendous migration right now, both out of cities into suburbs, but also out of metro cities into other parts of the country. California's moving to Utah, Arizona, Texas, all the way to Florida. By the way, we're seeing to hear 1,000 people a day moving in. The big highlight on the news about home ownership is being driven by the upper class, because everybody else, look, you got to have 20% down after COVID. You did not need that before COVID. You need a job that is secure. They're going to look at how you actually went through March, April, May, and June with your job. If that was even slightly suspect, you're not going to get a home loan. So on an average home of, say, $300,000, you need $60,000 cash. You need better credit score than you needed before COVID, and you need a secure job. So this will spike for a while until the wealthy are like, okay, I'm done, I got my place, and then it'll sag out again.
Yeah, and we've seen that with new buyers coming in here. Of course, obviously, low interest rates is good, but as we see home prices getting pushed up, it does maybe price out that lower-end buyer from the market. But beyond that, I mean, we're talking about, I guess, the risks here, and I'm not saying we are in for a repeat of 08 and 09, but there are questions about what it might look like the farther along we move in this recovery if we continue to see that stall, and the idea that we might see delinquency rates for mortgages start to rise. We did see them inch up a little bit here in the month of August versus July at 4.87 versus July at 4.71, but still way below the peak we saw in 2010 at 13.8%. So, I mean, when you think about that risk, talk to me about maybe as we get further along, if we see unemployment stay high, what that could mean as well.
Look, I don't think you see a housing crash. I mean, I don't even think about a housing crash. I think about stalls. I think about a lack of interest. This is what I said the last time I was there. Look, we're going to become a renter nation in this country. This is going to feed apartments. The boom today in housing, all the housing starts, 80% of the housing starts in a country are apartments. Builders cannot afford to build new homes and sell them at a profit. They can build 50 units, 100 units, 200 units in a location. That's why you see this happening in cities across America. Renting will become the economic choice and the desirable choice, again, because of this migration. When you have Amazon, when you have Amazon moving into new markets.
Yeah, and you have
Facebook. Yeah, go ahead.
I mean, you have more than $1 billion in terms of assets under management here.
You cut me by $1.2 billion.
You got to update your website then, Grant. You got to update this website here. But listen, I mean, when we talk about apartments specifically, I mean, that's a large chunk of what you guys focus on, right? And we think about that. Obviously, you have insight into what's going on with the renter market. Delinquency rates on rent still pretty much where they were last year, only about 1% lower than what we saw in the month of August. So talk to me about maybe some of those fears too, maybe being overblown in terms of, we see unemployment benefits rolling off at the end of July. You would have expected maybe an increase in delinquency, but what are you seeing in terms of the health of renters out there?
Well, Trump came in with all that money, so people, the renter. Look, there's the law, and there's natural law. The renter wants to improve the quality of their life, and they know they're not going to go out and buy a home tomorrow. Particularly with what you're just saying about the pricing increases across the board in almost every city in this country. So the renter knows I don't want to not pay. Because if I don't pay Mr. Cardone his rent, the next place I'm going to stay at is going to be slightly less desirable than the last place I left. So We're at 98.4% collected on about 94% occupied. We have lost nothing. A national average, I think, is around 82 or 83. As long as you take care of the tenant, take care of the property, and don't overcharge people, you're fair in the exchange. When you have 8 and 9% unemployment, buying a home's not what you're going to do. Renting is where that money's going to go. And I can also tell you that the big institutions are selling. They can't sell their hotels. If they need to redeem, if a big group needs to redeem cash right now or put themselves in a more liquid position, they are not going to sell a hotel. They can't sell their retail, and they can't sell their office. So what are they going to sell? They're going to trade their apartments so that it looks better on paper. And I can just tell you that the amount of money out there chasing yield today, our cap rates on our portfolio compressed because of COVID. COVID probably made me a $500 million richer on the valuation of my apartments because there's no place to get yield. So the investor seeks to go to apartments, and he's able to pay more because rates have collapsed as well.
No, it's a very interesting way that all of this is shifting around. Obviously, housing has been one of those things that we've talked about appreciating here in 2020. Not necessarily the case in the equities market or a lot of different areas. So we're going to dig a little bit further into this. I'm not going to shortchange you again. We're giving you more time here on the other side of the break. Grant Cardone's going to stick around with us. We'll talk more about the economic recovery outside of real estate right after this. Stay with us.